Do you know that the credit cards in your hand is the killers? Yes, you heard me right. In this video, I will expose the secrets of credit cards the credit card companies will never tell you. At the end of this video, you will be able to determine the best way your credit card can be in your favor rather than being detrimental to your finances. This series comprises of 4 episodes. Sit back and enjoy episode 1 and remember to subscribe to this channel so you can get the notification for the next episodes on 20 deadly secrets hidden in credit cards. In this episode, we will cover 5 hidden secrets. First, credit card fixed rate. Number 2, credit card companies' legal right. Third, credit card limit secrets. Number 4, the rewards hidden agenda. The last but not the least, number 5, credit card balance transfer. The prevalence of credit cards in our society can sometimes overshadow the less favorable aspects of this industry. Many consumers who rely on these convenient plastic cards for their daily transactions are unaware of the hidden secrets buried within the fine print of their credit card agreements. They remain oblivious to their own rights and the questionable, yet legal, practices employed by credit card companies to maximize their profits. From misleading terms and misconceptions about building credit to the pitfalls of rewards programs and the consequences of late or missed payments, there are numerous realities that credit card companies prefer to keep concealed. In an effort to bring these secrets to light, we present to you the 20 most significant credit card secrets in the industry. 1. Fixed rate? Not so fast. When considering a credit card, one of the primary details that most cardholders pay attention to is the APR, or annual percentage rate of charge. This rate represents the interest you pay for utilizing credit, money that is essentially borrowed and not your own. Interest rates can either be fixed or variable. Credit card companies often claim that a fixed interest rate remains constant, while a variable interest rate fluctuates. However, this description oversimplifies the true distinction between the two. The real difference lies in the fact that a fixed rate is not directly linked to any other benchmark, whereas a variable rate is. The index or benchmark upon which a variable rate is based changes periodically, causing the rate to rise or fall in accordance with that index rate. A fixed rate, although not as volatile as a variable rate, is not set in stone. It can still be subject to change at the discretion of the creditor. It is important to carefully review the fine print of your credit card terms, as credit card issuers have the ability to increase your APR with proper notice. However, there are limitations to when they can do so, such as within the first 12 months of opening a credit account, unless it was an introductory offer and payments are made on time. Before the Card Act was passed in 2009, credit card companies only had to provide consumers with 15 days notice, leaving little time to adjust before the APR increased. Now, they are required to give 45 days notice. However, if you have a significant balance, this may not be enough time to avoid the consequences of a sudden rate increase before the due date. Typically, credit card companies inform customers of rate changes through postal mail. If you are not diligent in checking your mail, you may be unpleasantly surprised by a higher interest charge on your next bill. Your credit card company can legally charge whatever interest rate it wants. Credit card companies have the legal right to charge any interest rate they desire. Credit card issuers have the authority to charge any interest rate they choose. Federal regulations do not limit how high an interest rate can go. Although federal regulations such as the Credit Card Act regulate how much notice a credit card company must give the consumer before raising rates, there are no federal caps on APR percentage. As a result, credit card companies have started using APR hikes as a loophole to charge consumers more after regulations limit other credit terms. Another point to note is that federal regulations do not limit how high an interest rate can go because there are no federal caps on APR percentage. Credit card companies have taken advantage of this by using APR hikes as a loophole to charge consumers more after regulations limit other credit terms. Prompt 3. Discuss the impact of usury laws on credit card interest rates. More than half of the states in the U.S. have some form of state-level regulations in place that limit interest rates on loans, known as usury laws. However, these regulations vary significantly across state lines and cannot be relied upon to help consumers get a lower credit card rate. Under a Supreme Court ruling, national banks and credit card companies can charge consumers in any state any interest rate that is legal in the state in which the company is headquartered. This means that credit card companies can establish their business in a state without usury laws or with more lenient usury laws to charge interest rates at unlimited percentage rates. Let's move on to the third hidden secrets of credit card. Usury laws, which limit interest rates on loans, vary significantly across state lines and cannot be relied upon to help consumers get a lower credit card rate. Credit card companies can establish their business in a state without usury laws or with more lenient usury laws to charge interest rates at unlimited percentage rates, according to a Supreme Court ruling. It is advisable to use your card solely for purchasing items that you would have been willing to buy with your own money, if possible. While credit card companies aim to make profits, they also need to provide enough value to entice individuals to open an account with them. If they impose excessively high interest rates, it becomes challenging for credit card companies to attract enough consumers who are willing to accept their credit offers, thus jeopardizing their business. When it comes to no-limit cards, the term doesn't necessarily mean what you might assume. If you possess a no-limit credit card in your wallet, you might be surprised to discover that these cards do have limits, although they are not openly advertised. The credit lines offered as no limit actually refer to the absence of a predetermined spending limit. While it may seem appealing to have the ability to spend without restrictions, no company will provide you with an unlimited loan, whether it is associated with a credit card or not. So, how does a card without a preset limit function? Firstly, these cards are typically offered exclusively to individuals with exceptional credit, and receiving an invitation to join this exclusive club is commendable, even if your credit isn't truly unlimited. Additionally, these accounts often come with annual fees that can amount to hundreds or even thousands of dollars. Credit card rewards may not be as enticing as credit card companies make them seem. While perks and rewards are certainly appealing, they may not have as big of an impact as you might expect. That being said, there are still some benefits to credit card rewards programs. It's always nice to receive something in return for your regular purchases. Depending on the specific rewards program offered by your credit card, you may have various options for redeeming your rewards. These options can include receiving cash back, either through a check or direct deposit into your bank account, or applying the rewards as a statement credit towards your account balance. Additionally, you may be able to use your rewards for travel credits or vouchers, such as airline miles, or for gift cards to a wide range of online and physical retail stores, restaurants, and other businesses. Some credit card rewards programs even allow you to make charitable contributions to nonprofit causes or use the rewards to make payments towards your mortgage or student loan debt. Credit card points can be a valuable tool for improving your financial situation when used strategically and over a long period of time. While it may seem enticing to earn rewards, it's important to understand that reaping the benefits of these rewards takes time. Typically, one credit card point is worth about 1 cent, although the exact value may vary depending on how you choose to redeem them. If your credit card offers 1 point for every dollar spent, you're essentially receiving 1 penny back for every dollar. While this may seem like a small amount, it's important to consider other factors such as annual fees or higher interest rates that may offset the value of these rewards. It's crucial to approach credit card rewards with realistic expectations and avoid making unnecessary purchases solely for the sake of earning rewards. Instead, focus on using your rewards wisely and consider using them to offset regular purchases, which can help you save a little extra money in the long run. Destroy those balance transfer checks. Credit card secrets. In 1 month, your paper credit card statement arrives with enclosed checks. These checks are known as balance transfer checks, and it would be wiser to shred them rather than utilize them. Balance transfer checks provided by your credit card company may appear to be a convenient method to use your credit for bill payments where cards are not accepted or to consolidate your expenses into a single account. However, there is a significant drawback. Using these balance transfer checks incurs a fee. Frequently, this fee amounts to as much as 5% of the check's value. Let's say you decide to use one of these checks to pay your rent or mortgage, which is a substantial expense that may not be payable by card according to your landlord or mortgage company. If your payment is $1,000, you could end up paying an additional $50 for the convenience of using the check, and this does not even include the interest rate on your credit account. Unless you genuinely have no other alternative to avoid defaulting on a bill, it is often better to refrain from using balance transfer checks or, at the very least, carefully examine the fine print. When would it be sensible to utilize balance transfer checks? If you are offered a promotional low or 0% interest rate, and you are fully aware of the associated fees and have a solid plan to repay the amount before the promotional period ends, then go ahead. Just ensure that you have thoroughly read and comprehended all the terms and conditions stated in your card agreement. Otherwise, Acknowledge that balance transfer checks are designed to benefit the credit card company financially, not to provide any favors to you. Dispose of these checks responsibly. If you are seeking to consolidate your debt, begin exploring other more cost-effective options such as balance transfer cards and personal loans. At this juncture, we will conclude on episode 1, and we recommend you subscribe, share, comment and like this video and watch out for the next episode. Thanks for watching.